We did it. We did it. As a nation, we are $38 trillion in debt. National debt just went over $38 trillion with a T. I've been talking about this on this channel for over a year. This year, in about 10 months, the deficit or the debt, national debt, has gone up $2 trillion. We still have a couple of months to go. It's getting quicker and quicker. About every 110 days now, we're going to increase the national debt by $1 trillion. Now, you all understand how that happens, hopefully. How does it happen? We, as our treasury, we take in income from all types of sources. Obviously, income taxes, capital gains taxes, corporate taxes, all kinds of stuff. So that income that's coming into the treasury is about $5 trillion a year with a T. Okay. Unfortunately, we in Washington like spending those dollars like drunken sailors, and we take another $2 to $2.5 trillion in borrowed money, in IOUs we put out all over the globe through the treasury. Obviously we have to pay interest to these people. And then that's when the printing starts, for lack of a better word, creation of synthetic money, creation of dollars. And then that's how the national debt goes up, $1 trillion every 100 days. Because we have budget deficits. We spend more than we take in. Simple. So we have a 2-inch pipe that the water is coming in, which is, right, tax receipts, all kinds of things. And then we have a 3-inch pipe that's going out. Well, it's got to feed the animal. And now you all wonder why the stock market is at an all-time high, why gold was at an all-time high, had a little pullback, but still is. And crypto is hanging in there. Real estate is, obviously, most people are priced out of owning a home these days. So why is that? Well, that's because of that we print or we add zeros to the ledger. We have to. Look, we have a deficit. If you are running your household budget the same way, two things will happen to you. One, you will be maxing out your credit cards, living on credit cards, which most average Americans are doing these days anyway. Or you have to cut spending somehow. Well, we tried that with Doge. We know how that ended. That didn't end that well. Elon only could take about 3 months of Washington. He goes, F this, I gotta go. It doesn't matter who's in the White House. It doesn't matter what political party is in charge. Both sides love spending money we do not have. If I were to run my household budget the same way, now I'm not against debt, don't get me wrong, that's fine. But now we're getting silly. I mean, this is silliness. And Elon has put this out a couple times. I've been following this closely. Just the interest, the servicing cost of this national debt, because we have to issue bonds, notes, bills, different durations, right? Average interest on that is about 4% or maybe 3.7%. So that interest has to get paid to the IOU holders, to the bond holders, note holders, bill holders, right? Okay. Well, that interest cost that we're facing as a nation is up to $1.2 trillion a year. This is just the interest. And then when these bonds, notes, bills mature, we have to replace them with new ones because this is not going to get paid back, right? I don't think it's ever going to get paid back. So that's why people have figured out, rich people mostly, and that's why I'm trying to do, by the way, say, hey, listen, there's a game going on. we need to do this. We need to play the same game, which is you got to own hard assets, because through this more dollars sloshing into the system. I mean, dollars are like potatoes, tomatoes, right? Okay, it's more supply, right? More supply of dollars have to get created somehow, and they do. Um, and what happens when there's too much supply of something? You all know supply demand, right? When there's too much of something, the price goes down. Well, that's you're losing your buying power on your dollars every single year. This has been going on. Actually, this whole thing got started to accelerate after the 2008 GFC, Great Financial Crisis. So what's happening now is we're at a point that we're just kind of going parabolic, like some of these, nosebleed stocks that I was talking about a couple of weeks ago that all crashed 30-40%, which are now on the comeback a little bit. But the point I'm trying to make is this is just going to continue. And the hard assets, stock market, all that, they're seeing it. On top of that, the Fed is in an easing cycle because there are rumors that there are a lot of cockroaches in the regional banking system. And check out some of these stocks, what's going on. Zions Bank and stocks like that, they don't move like that. Okay, these are bank stocks. There is also talk that there is a lot of problems in private equity circles. And who has lent money to private equity? The banks. Are the banks in better situation than they were in 2008? Without a question. But are they that much better off? And what's happening now is that the next black swan? I don't know. I'm watching closely, but I'm trading. I'm investing and I'm trading. So to me, it's like you got to read the tea leaves and you got to make a judgment or decision and, act accordingly. But going back to the 38 trillion in debt, so there's too many dollars out there. Okay. The definition of inflation is too many dollars chasing too few goods. Well, that's why inflation is persisting, because we create the synthetic dollars out of thin air and put it in circulation. When you put that in circulation, they're going to go chase return. So, and at the same time, the average American, right, is losing buying power every year. 6, 7. This year, the US dollar has come back a little bit. It's down about 9 to 10% against a basket of currencies. Well, why is that? Because that's because of the national debt. There's so many dollars sloshing around. So much supply of dollars because we keep creating dollars out of thin air. And when you do that, when you create so much supply of something, the price has to get adjusted. It's going down. The point in all of this is we have a zero fiscal discipline. We have a broken fiscal policy in Washington, given. Doesn't matter, Democrat, Republican, whatever. What happened to the good old Republicans? What happened? What happened to their fiscal responsibility? What happened to the balanced budget? What happened to that? Remember, there was a balanced budget amendment. What happened to all of this stuff? Out of the window. So I look at this 38 trillion and the 1.2 trillion, which is to be 1.5 trillion next year, just the servicing cost, interest cost, right? As an anchor, heavy anchor on a boat. I sail quite a bit. And if I'm dragging anchor, even if you put the engine full on, okay, let's say you're in a power boat, but you're dragging anchor and you put the engine on, it's not going to go anywhere, right? The anchor is like slowing you down. That's the way I look at this thing. We're in a nice boat. We're in a beautiful, powerful boat, which is the U.S. economy, which is GDP is almost $30 trillion. But now we dropped anchor. We can't pull it up. We're dragging it, and it's slowing us down. But then, does anybody believe that this is going to be solved anytime soon? No. And the markets are feeling it. Look, markets making an all-time high today on all indexes. That's where the money is going. People, the dollar debasing is continuing. The dollar devaluation is continuing. And who's suffering in all of this? People who have not invested, okay? People who have no idea about finance, and they have no financial literacy, And it's a good thing that I really am. I would love for all of you to join me in this new venture I have. It's not a venture, I would call it. I'm just doing it out of love, because there's no money in YouTube or Twitter or whatever. I don't care about any of that. I'm fine. Welcome to my backyard, by the way. This is my backyard. So maybe this will inspire you to invest, to properly do things, get your financial house in order, financial literacy. It'll get you here. Okay. And the point in all of this is, this debt is an anchor. We can't lift it. We can't eradicate it. We're going to spend $1.5 trillion with a T dollars next year, paying interest to some folks.